If you get much more uptick in the price of silver in relation to gold. Now, if you go back to the February low, silver's outperformed gold. So have the gold miners. They've doubled the performance of gold from the February low I'm talking about. So in the recent surge, they beat gold. If they continue to do that just a bit more, they're going to go into first place again, where they outperform gold going forward, which is typical in the latter phases of major bull markets. As far as price targets, we've thrown out one before that people chuckle at, and that's $8,000 gold. All that is looking back at the prior two major bull markets and look at the multiples that were gained by gold then, based on far less dramatic fundamentals. And if you do it again, you're going to get 8,000. That's just routine. That's just another echo effect of the prior two.
MichaelOliver of Momentum. Structural Analysis has set an ambitious price target of $8,000 for gold, drawing parallels from historical multiples observed during previous bull markets. Despite prevailing market conditions characterized by a strong dollar and lucrative returns from investments in stocks and cryptocurrencies, gold prices have demonstrated resilience, hovering around $2,195.24 per ounce on Thursday, March 28th. After reaching $2,222.39 the preceding week. The current market landscape is witnessing a surge in gold prices, marked by bullish weekly, monthly, and quarterly highs and record-high closes in futures markets. While experiencing modest gains, silver prices also exhibit technical buying amid bullish chart patterns. Oliver suggests that the ongoing gold bull market may be transitioning into its latter phases, characterized by intensified movements and increased dynamics, signaling significant upside potential for gold and silver, particularly in the near term. Despite silver lagging behind gold in the futures market, assuming a permanent divergence between the two metals would be unwise. Traditionally, silver tends to follow gold's lead with a delay, but once it gains momentum, it can outperform gold. Furthermore, Oliver observes that silver and gold miners have already demonstrated outperformance relative to gold since the February low, indicating a potential shift towards silver outpacing gold in the future, an occurrence typical in the latter stages of major bull markets. Dennis Gartman, a renowned commodity trader, emphasizes the importance of a silver price rally in solidifying the bullish momentum in gold. He acknowledges silver's historical leadership in bull markets. He expresses cautious optimism about the current divergence, suggesting that while the norm suggests silver typically leads gold, this time might present unique dynamics. Come along as we explore the valuable insights provided by MichaelOliver. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Gold bull market is not a new one. Okay, it began in December of 2015 at a price of 1,046 low in US dollar terms. Okay, so we doubled between then and 2020. And by the way, other bull markets over the last 50 years, you can look at the mid-1970s to the 1980, that's 7-8 years of upside from $30 range to 850. And then you went from 250 in the year 2000. And by 2011, you were 1920. So, a huge multiple gain, but a lot of years involved there. Okay. Same here. This one's now, getting into its ninth year or so. So usually at the tail end of those bull markets is when the cataclysmic events start to occur, that suddenly everybody wakes up and realizes what's been going on. And you also get price drama in the late part of those bull trends, especially what you get, for example, with silver in relation to gold. During much of those bull trends, the prior two bull trends, silver went along with gold, but in a sloppy manner. It wasn't an outperformer. But at the tail end of those moves, it left the earth. On a percentage basis, it was like off the page. You go from $15 silver to $50 in 12 months, that kind of thing. I think that's what we're facing this time. Now, we measure that a couple of ways. One is the spread relationship between silver and gold. You can plot it. And then we do momentum studies of that spread. And right now, I can tell you, if you get much more uptick in the price of silver in relation to gold. Now, if you go back to the February low, silver's outperformed gold. So have the gold miners. They've doubled the performance of gold from the February low I'm talking about. So in the recent surge, they beat gold. If they continue to do that just a bit more, they're going to go into first place again, where they outperform gold going forward, which is typical in the latter phases of major bull markets. So as far as price targets, we've thrown out one before that people chuckle at, and that's $8,000 gold. All that is looking back at the prior two major bull markets and look at the multiples that were gained by gold then, based on far less dramatic fundamentals. And if you do it again, you're going to get 8,000. That's just routine. That's just another echo effect of the prior two. And given the fundamentals that Alistair is aware of and that I'm aware of, this could be far worse. And also, I don't expect it to be arm wrestling. A lot of this bull market the last 9 years has been arm wrestling process. You gain 2 steps, you pull back 1, you bore the heck out of people, you spook them. But finally, in the latter phases of the bull market, you get the exaggerated moves with speed and dynamics. And I think we're on the cusp of that right now.
Oliver explains that despite silver's price volatility, its annual momentum consistently reaches a flat ceiling, suggesting a potential breakout if it closes above a certain threshold, notably at $25.27 or higher. The silver price is expected to face downward pressure, potentially testing the critical support level at $24.30. Market observers closely monitor price movements, awaiting more precise signals for the next trend. This includes watching for a breach of the mentioned support or surpassing resistance at $24.85 and maintaining neutrality until a more accurate direction emerges. Oliver anticipates a potential decline in the stock market, prompting asset managers to reallocate investments from stocks to gold and silver miners. Even a modest downturn in the stock market could trigger this shift in asset allocation. Speaking to Yahoo Finance, Dietrich highlights several indicators in the market, signaling caution for stocks. Red flags include the S&P 500's price-to-earnings ratio, which mirrors levels seen prior to the dot-com bubble crash, suggesting potential risks ahead. Let's get back to the interview.
Gold miners and silver miners are probably more undervalued to the U.S. stock market and more undervalued to gold than they've ever been in history. Like we don't need gold miners. What's under the ground there? Gold. Oh, we don't, whether you want gold, but you don't care about the miners. Okay. Anyway, I think they're going to slingshot, but we measure that technically. Silver right now is at an interesting place when you look at its annual momentum. Again, I spoke of the stock market having a topping pattern on annual momentum, which I think has already been initially triggered. And when you top on an old bull market, it takes a while to top out. So it's not an instant thing. But in the case of silver, we've spent the last, since 2022, 23, and into 24, 2.5 years now, where if you look at the price of silver, it's sort of a staircasing down, but it's irregular, whereas you can't really draw a good line. It doesn't have multi-points that all line up or a flat ceiling. But when you look at annual momentum, it's a perfectly flat ceiling. I mean, we've hit it like 3-4 times. It's a very shallow level on the oscillator. I mean, silver gets only a few percent above its 36-month average and pulls back. Does the same thing later. So you built a structure, which you cannot see on price, which is the kind of thing we look for in momentum. You're at that structure now. In fact, if you close out this month, and we do it on a monthly closing basis, 25, 27 or higher, you're breaking out. And we've traded above there this month using May silver, and we're slightly below there now, but there's a week and a half to go. You close 25, 27 or higher, and the number adjusts down about a dime a month, by the way. You're launching. As far as we're concerned, you will see over the subsequent 6 months a likely technical launch in silver where its dynamics suddenly go from this sloppy holding pattern we've had for the last 3.5 years to something that surprises people. Much like, remember the March 2020, July 2020, silver went from $14 to $30, 6 months. Okay, people were shocked by that. There was a similar but lesser structure then on momentum. This time we have a pristine. If you saw the momentum chart, you would say, oh boy, but most people don't see it. And I'm saying right now, we're on the cusp. Miners have something very, very similar using GDX. It has an annual momentum structure where at its 36-month average, it's bumped it for 2.5 years. So it's a perfectly flat structure. You do not see it on price. So again, as technicians looking at the momentum, the structure, I'm telling you, you're on the cusp right now. All you have to do is close out this month basically a point higher than we've been in GDX this month, meaning get up over 31. And silver's already been above its number. So, and at that point, I think the tone will change in the market. Now, what other factors might help that? I'm suspecting strongly that you'll start to see a slab type decay in the stock market, where it suddenly starts to give them, not a crash. That could happen, but that's not going to happen right away. That looks like something that's, you'd have to get the S&P down to around 4,300 right now. Where are we? 50, you've got to drop 10, 12%. You get down to 4,300 again, and you could get a crash effect in the S&P. But the shift in the stock market to the downside is going to what? There's a lot of asset managers out there who've already expressed skepticism about the market. Why? Because they've been around long enough. They know better. They know what an extremely limited market is in terms of leadership, and they're doubtful, but they have to be in the market because they have a product. And if they're not in it and some other guy's loaded up in stocks and he's beating their performance, they're going to lose their base. So they have to be there. But if you give them even a modest excuse, moderate excuse to get worried again, like suddenly, oh, S&P just dropped 5%. The technician comes up to him and says, "We just broke something, boss." You'll start to have asset movement out of that category. And I'm arguing likely it's going to go into the gold miners and so on.
With the anticipation of a potential decline in the stock market prompting a reallocation of investments into precious metals, what indicators or signals should investors monitor to navigate this transition effectively? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.